As Bob just pointed out, one area that has been of particular concern, of course, has been and is the oil patch. The reason falling oil prices were leading to layoffs. And that manifested itself in last month's jobs report and in a big way. And when it comes to labor pain, Morgan Brennan tells us this might just be the beginning.
Crude's price collapse has been taking a toll on jobs in the oil patch. Energy companies have been laying off tens of thousands of workers, and those cuts were particularly steep in March, a big reason for Friday's disappointing jobs report. According to the Labor Department, the mining category, which includes oil and gas, shed 11,000 jobs. It was the third straight month of losses, bringing the total for the first quarter up to 30,000 jobs lost. To put that in perspective, mining added 41,000 positions in 2014, meaning roughly three-quarters of last year's gains have already been erased. Economists expect those losses to continue.
I suspect in April, May, June, we'll continue to see sizable losses. 10, 20,000 jobs lost per month. It'll be a bit of a drag on the overall picture, but I think there's still a fair amount of underlying strength in terms of jobs growth in the U.S. that it won't derail things.
As the number of U.S. oil rigs has rapidly dropped, oil and gas industry payrolls have followed suit, with oilfield services companies like Schlumberger, Halliburton, and Weatherford International making some of the biggest staffing cuts. Among the states hardest hit, Texas, Oklahoma, and North Dakota, which as of February no longer touts the country's lowest unemployment rate, the first time since 2008. But the effects of the energy downturn are beginning to ripple out to other industries as well, particularly manufacturing.
Employment growth in manufacturing steadily decelerate over the last few months. We had about 45,000 jobs positive in November, and then last month it was a minus 1,000 jobs, and that could be further in negative territory in the next few months.
The fracking boom had been a bright spot for U.S. manufacturers, fueling demand for oil and gas equipment and metal piping. But the drop in demand, coupled with a stronger dollar, is now causing companies like U.S. Steel to idle plants and lay off thousands of workers. For Nightly Business Report, I'm Morgan Brennan.